Okay, I wanted to do this video, show some people how I've got my sectors set up on my charts and basically how to set up and lay out different ways of setting up grids, charts for thinkorswim. So basically over here in Active Trader, you've got different ways you can set up your grid to have a different number of stocks here you can be watching like this, like however many stocks you want to watch at a time. Over here you've got your like watch list area. You can put your CNBC, any of your other things over here. You can just click here, go to add a gadget, and you got all these options here. You can go to Trader TV and watch CNBC right here.
Quantity to market. Other suppliers should be there, but they've been stopped. Shouldn't you be more indicative?
Alright, enough of that. You can also go up here to chat support. A lot of people don't know this, but you go up here to chat support and you go to live support, you go to chat rooms, and down here you see Benzinga Squawk. You can click on that and then go to listen, and we'll keep that on because anytime during this video, if that goes off and they chirp about something, you'll get to hear it. So those are a couple other quick little perks. I don't know if people know about thinkorswim. You get free CNBC, you got free chat rooms up here, quite a few of them. Benzinga Squawk Box, which costs money for most people as a through Benzinga. I know it costs some money monthly to be subscribed to them, so it's another one of those little free perks that comes with thinkorswim. So anyway, up here is your grid selection. You can be watching this many stocks at a time. Let me get this out of the way. There we go. You can be watching this many tickers, however you want this set up. You just click here and you just select however many you want lit up. Now, once you've got a certain selection the way you want it, you can save a grid. Now, this is one account that I have. On my other account, I have all these grids saved. Like here, we'll go to gold by sector, right? So I can just go through, set up my chart style how I want it, what time frame, all the specifics, what have you. I can even put on studies, doesn't matter, whatever studies I want. I can set it up, each chart, such that each chart has its own study. Like I could have this be my VWAP chart, I could have this be my moving average chart, I could have this be my RSI chart, and I could put all the same names in each, or I can just put a different ticker in each box. The possibilities are pretty much endless. You don't have to have it set up like this. I have a separate monitor where I move all this over. I'll take this whole platform and I move it over off of this monitor. It's now on another monitor that you can't see, but then I use this platform for most of my actual day trading. And this is my prop firm account, and I day trade on here. But I'll use these two charts as my main two watches that I'm actually in. I usually don't take more than 2 positions at a time, but this will be where I actually trade. And then I've also got some other charts over here that I use for just watching other. I'll every morning I run scans and I set up like a today watch list. I look for breaking news headlines, I look for volume or gapping plays, and that's all pre-market. And then I set those tickers aside. Here, we'll move this back over so you can see. Okay, on this other monitor over here, as you can see, I've got like airlines. Okay, these are like 8 of the major airlines I like to watch. uh, all these different right here, setup 1, setup 2, oil. Hey. Okay, so now these are all the different oil related stocks that I like to watch, and like the actual futures price of oil and all that kind of stuff. So basically how you save a grid is you set it up the way you want it. You just set up your grid the way you want it. And if you actually depend on thinkorswim to trade also, not just to watch your stocks, which I do. I have, I do have a little bit in this account, not much, just a few $100. So basically, I use that account only once in a while. But ultimately, what I do use it for is watching. So what I do is like, I'll go to setup 2. This is setup 2 is kind of my. It's one of 2 of my random watch lists. So as you see on here, I've got Tesla, Medivation, a couple different biotechs, lumber liquidators, just kind of some random different ones. Some of these gold ETFs up here. But I can switch them out. Like anytime I want to like check out something else, it's just it's easy. So I just whatever. And so once I like the way once I have it the way I like it, I can just go to save grid as, and boom. And that way every morning these are here. If I want to check airlines, it's this quick. There's airlines, bam. If I ever need to glance over real quick at the watch lists, these I pretty much keep like this. Top 10 game NASDAQ, top 10 game New York Stock Exchange, and then down here, down here I'll usually have one more watch list for my what I call easy to borrow stocks that in the past are easy to borrow, with basically with shares shortable. I like to play stocks on both sides, or I like to have stocks that can be played on both sides, because I feel much I know it sounds crazy, but I feel much safer in a stock going long when I know that there's shares available for shorting, because that will allow for more squeezing. And for those who don't know or know me, like my personal theory on price action is
MCD, McDonald's.
There we go.
Longo Research's Alton Stump tells Benzinger that it makes sense for McDonald's to try to turn China over to a franchisee group. Believes the incremental $2 billion in proceeds, if garnered, to be used primarily for buybacks. Further elaborates that McDonald's is shifting toward a more franchise store base globally, and China is clearly a tough and volatile market where having local franchisee ownership is perhaps better suited versus any other region. That's MCD McDonald's.
Okay, see that quick? I could just hear the squawk box, and then I could go right to the stock, watch what it's doing. Up here it goes, start to perking a little bit. It's probably going to trap some people in on the long side. So this is my theory to price action, right? Okay, because a lot of people say, oh, this is a real quick breakdown. Right here a bunch of people bought, and that's what pushed the pressure up. Volume, a little bit of volume came in, pushed the pressure up, and then some selling happened, and then some buying happened, and some selling happened, buying happened, selling happened. Nonsense. I say it's the other way around. Selling happened, buying happened, selling happened. So the things that actually drive price action, 9 times out of 10, it's a matter of where more of the money in the market is. If more of the money is on the short side of the market, then it's going to go up. the price. And if more money is on the long side of the market, then the price is going to go down. It has nothing to do with supply and demand and this thing and that thing, and most of that shit's lies, in my opinion. I mean, you do see those forces. They like, every once in a while, you'll see a stock that, you know, the buying pressure shoots it from, say, whatever, you know, these supernova plays. Yes, there is some buying going on through there, but the majority of what's going on is the shorts are getting screwed. And so you need to think of the market as not like, oh, what side of the market do I have to be to make money on? No, it's about what side of the market are you to avoid from getting screwed. Because if you take this approach at looking at the market, like right here, a lot of people are buying because they see, you know, on this 1 minute candle, they see, oh, there's could be a break out of this resistance level, and then sure enough, you know, buyers pile in right here, and it'll probably shit on them. Now, there are probably some people getting short here, but if the shorts right here outweigh the longs, if more shorts pile in, or more money even, doesn't have to be a number of people, just if one guy comes in and puts down, you know, a massive amount of money on a short right here, and it outweighs the money that's on the long side of the table, then it's going to spike up. It's going to keep running up, because the price will go in whatever direction gives, you know, basically the market more money. You know, it's this big, just like the people who own the IRS, it's this big shadow question mark figure of who actually, you know, where does all the money go that, you know, 99%, or, you know, we're all told that 90% of traders lose 90% of their money 90% of the time. So if that's the case, then where does all that money go? And to who do those people, you know, essentially work for? Or, you know, obviously if nobody else, then, you know. But this is one of those situations where I've always wondered, like, why is the price got to jig back and forth in such a way? It seems like no matter where I get in, it always goes right against me for a little while first before it starts to go for me. And that's just because these algorithms are in here and they go, oh, there you are, you think you're going to go this way? Well, it's going to go that way. What do you think of that? And their whole job is just to make you take a loss, no matter what your position. So you could be long, short, you could be right both ways. You could be like, man, I could have made money on the short side and the long side, and I was long and I was short, but in truth, you lose on both trades because the algorithms don't care about when you're not there. They only care about when you're in the trade. So when you're in the trade, then that's when all of a sudden what looked like a perfect setup starts not to work. And so yeah, you got to be picky about being part of the herd or trading against the herd. You want to trade against the herd. Now, of course, if everyone traded against the herd, then where would the herd be when they're trading against the herd? You know, it's this big runaround of the smart money chasing the dumb money, and the dumb money trying to be smart money. And so ultimately, nobody's gain in this game is made without being someone else's loss. And so ultimately, there is an evil nature to this that people just need to be aware of if they're going to try to get involved with this and not put, you know, your whole life savings, or like your, you know, go and pull some money out of the bank against your home to try to like day trade. Like, this is risky business, and like I trade like a scaredy cat. I only put like a little bit on at a time, and like I'm real careful about how much and when, and I mean, I'm really picky. I used to just think, oh, I was gonna just knock this thing out of the park, but I learned the hard way that it doesn't work that easy. So anyway, before I get too off my point here, as we're watching McDonald's spike up, I probably could just hopped into this a little bit and made some money, but we're gonna go ahead and show how to make and save a new chart setup. And here, what we really need to do is make one for biotechs. I don't have one for biotechs, and I don't watch a lot of biotech stocks. So what we'll do is we'll make a grid about this size. And then we'll go over here to Market Watch, and we can go to Visualize.
TSCO, Tractor Supply, seeing multiple put activity in the September 80 puts now on Tango Sandy Charlie Oscar.
Tractor Supply. Oh look, this one's easy to borrow, so I'm gonna go over here and I'm gonna left click. No? Okay, maybe I gotta click over here. There we go.
TSCO Tractor Supply at the lows now, 84.83 down 87 cents on that heavy put activity.
Selling off on them buyers. Alright, here we go. So I'm adding TSCO to my easy to borrow watch list because it's easy to borrow. So if you saw,
LPLA,
oh my god.
LPL Financial getting a spike in volume.
Now that you know what that's all about, I'm gonna go ahead and shut that off because it's just irritating me now. So that's the Benzinga Squawk box that I think's like $175 a month if you subscribe through Benzinga, or like maybe it's $75. Either way, it's quite a bit and it's free through here, so that's pretty cool. But yeah. So we're making a new biotech grid. So you go over here to Market Watch and you go to let's see, public, and then you have all the sectors kind of broken down here in a way. These are the indices. So in here you should be able to go to here, we'll go to NWS and then go to healthcare, biotechnology, biotechs, okay? Let's see. Onvo is one I've watched before. Nvidia has been on fire lately. Oh, so what you do is you go back here. The easiest way to do this is you go up here to this linkage and you put each one as a new number. You go like this. Okay, so now this reads 1, 2, 3, 4, 5, 6, 7, 8. And then you run out after 9, but you can just do the other ones manually. So then you go back to Market Watch and you can kind of just do this. Send Onvo to 1. Send MDGN to 2. Let's see. NAVB will send to 3. Oh, IBIO will send to 4. I know of some other ones that I want to watch just off the top of my head. I mean, AMDA can stay there. EBIO. I mean, they're in healthcare, but still. Okay, these are all like pharmaceuticals, so I guess they can stay. I call this one like healthcare biotech. What are some other big biotech names I've watched before? Oh, we can come out of this. This heat map tool is pretty cool too. You should get familiar with how to use it. Okay, so let's back out of this, and then we'll go right to 2500. There we go. Healthcare, biotechs, MDVN, ICPT, PBYI, that was that one. Yeah, ICPT, true. And as you can see, these ones down here are like, they're just defaultly setting it up different. Now you can go through and manually change each one to like what you really want there, and you know, make it exactly how you want it. Even put a study on real quick and just go here and say throw a VWAP on. Alright, so then minimize back out of this, and now this chart will always be here at 5 minutes with the VWAP, and if you save, if you save that way, that's how it'll stay. Now I could take this one and do like 2 charts and get this out of here, and then have one be the 5 minute and have one be, yeah, just like it is, have one be the daily chart, and then you know, put you know, this is kind of an RSI type crossover study. Didn't show up. Alright, well, you get my point. You can put different, you know, you can customize each chart setup exactly how you want it, and then it will stay that way when you save it. Try not to take forever doing this so I can just move. Okay, and then let's see, some other biotech. Oh, how about one that I hate? Monsanto. Okay, so there we go. Alright, now you go down here to save grid as. You got a new grid, and you just go biotech / pharmas. And then it's there if you ever change any of them or whatever. Pharmas. If you ever change any of them, see, there it is now. Boom, pharma, biotechs. I can go back to my airlines, and my airlines will be just the way it was when I saved it. And then I can go to, you know, any of these setups, will be just the way I left them when I last saved them. Now, sometimes at the end of the day, like my setup 1, what I'll do, I don't know if it's setup 1 or setup 2. One of them's tagged, one of them's untagged. Oh, okay, maybe I didn't save it when I tagged them last. Yep, sure enough, I did not save. Alright, so this is a good point to show you what I'm talking about. Okay, when we go back to setup 1, which setup 1 is my like go-to setup for watching. Again, when I actually get on trades and place trades, I'm here. So, as you can see, I got a JNUG position that I'm down on. It's long term though, so I'm not, it's all good. I ain't crying about it. I got 1 share. So here we are. This was my setup 1. So I want to make this change. I want to have, this is what I meant to do earlier. I mean, I already did this, but I wanted to go ahead and switch it up in a way where they would save. Okay, now these might be linked between desktop setups. So I need to actually think real quick, because as I click these and change these, you notice how the ticker changed to the ticker that was saved in my biotext. Let's see if it's because these numbers correlate. EBIO 6 MDGN. Okay. Let's see what happens when I assign something to 3 and to 4. Yep. Okay. I didn't know that did that. I thought I could label these on different desktops and tag them with the numbers and not have them always want to associate between one desktop saving and another. So I guess what I'm getting at is I actually am going to go back to biotext. I'm going to unlink all of these. I'm going to show you why I'm doing this in a second. I'm probably going to confuse the shit out of you for a second. Just bear with me. I apologize. Okay, now that I've got all these unlinked, I'm going to go ahead and save it again as the same thing. Don't change the name. It'll ask you, are you sure you want to do that? But I've told it several times, don't ask me that anymore, so it doesn't ask me that anymore. Alright, so now I'll show you why I did that. Because my setup 1 is supposed to be where my links are. This is my go-to setup every morning, where after I run my scans, I have my like top 8 or 9 watches for the day. Okay, so these first 9 sections will be my new watches each morning, and then the rest just kind of, they alternate depending on what's been hot, like what's been in play. This is my in play setup, which is why it's called setup 1, and then setup 2 is like, it might be yesterday's hot plays that I'm watching for day 2 moves. So I always keep setup 1 and setup 2 just like this, and I spell them like this, and I spell them like this each time, so when they save to the current one the way I want it to. So I'm going to go ahead, now that I've got my links in here, I'm going to save my setup 1 grid like this. And here it is, setup 1, save. Alright, now it's like that permanently. Now the cool thing about that is, say I've got NAVB linked to 3. Now I can go to any other tab, like I can just go to Analyze and I can put in 3. And it'll automatically pull up all the information for NAVB. I can go to Monitor, All Products, and do the same here. 3. Boom. And it'll tell me the float size. It'll tell me how many shares have been trading right now, what the current bid and ask is, all that good stuff. Plus down here the option chains, if you're trying to trade options or whatever. So all that stuff's down here. You can also put, people don't know this, but you can add little attachments here. Whoops. Get out of here. You can add gadgets here, like level 2. Where is it? Where'd it go? I don't know why it's not showing it. Anyway, I need to stay on task. My task was to show you how to create different chart setups for watching. So this kind of, you get the feel, you know. I do this, I can watch 5, I mean, just right here, I can watch 20 different charts at once. I can quickly change the time frame, add studies, save changes, all through right here. And then I've got my setups just perfectly set up here for me to watch every morning. I can flip through them really quickly. If one sector's really hot, like say all of a sudden there's a terrorist attack and airlines are crashing, you know, I can hop on here and just see, like, okay, where, you know, really quickly, what are the support and resistance levels, what, you know, what good shorts might be coming with where the entries are still valid, that kind of thing. You just hop on it real quickly. The economy, you know, has some big news about, you know, how it's not going to sustain itself, and so usually when the market goes down, gold goes up. Not always, but typically, you know. So you hop on gold, whatever, you know, whatever your angle is, whatever it is, it just helps you break it down, watch by the group what's going on. And you can set up as many of these as your computer can store. thinkorswim does gobble up a lot of space, so you do want to be conscious of how much you're using. So again, that's how you do that. You know, anything else related to this, as far as like the chart setups and the saving and how to link your tickers together? I think I pretty much covered enough to make it enough for you to go and just play with it, try to get comfortable with that. Ooh, this looks like it might be a nice short setting up. So you can always just click on this too and go to maximize sell, and then it'll bring it up, and then from there you can, you know, if you actually trade with thinkorswim, you can just pull up everything else you need, all your other charts, your level 2, your news, bam, and then just hop in and be like, oh, you know, I'm gonna do this here. If I was on my you know, another account where I could trade this right now, in fact, if data breaks this low right here, this could be a good short. You want to see confirmation though, so basically what you want to see, it's going to do one to two things here. It's going to either bust through and bounce around and then fade off and drop and fade down here. It's going to start breaking down. Or it's going to start squeezing the shorts out. It's going to trap shorts right here. And it's going to start, so if a bunch of shorts pile in right now, it's going to stop and go up. If like a bunch of longs pile in here, thinking this is a low price to buy in at to try to ride the dip, then it'll probably keep going down and the shorts will make some money. So you gotta think about it like that, or you get chopped out. And it also helps when you get chopped out to not be so surprised. Why did I get chopped out? Well, because it's trying to take your money. I mean, you're messing with something that's trying to take your money. It does everything it can. It's just like a video game, a casino, pinball machine, a fucking carnival game, any other thing you can think of. Is just trying to take your money. And like any of those things, you can get really good at them and you can make money, but you gotta be pretty much like on point all the time. You've gotta be really good. So here, this looks like this might break down. I'm so tempted to get short here, even just like 100 shares, but it's one of those things, like if I get short here, I'm gonna turn around in a few seconds, it's gonna be at 62.10, 62.20. And it's like, well, then why don't I buy it? You know, and it's like, well, you know, now it looks like it might be a good buy, but it'll turn around here in a second and then be back at 61.80. So, I mean, when it's like that, which is almost every trade all the time, you just kind of got to be like, nah, you know, it's not an ideal, super awesome setup. You know, you got a stock that's been, sure, that, you know, it's been doing okay on the daily chart. You know, it gapped up, it's been running. It's kind of had all this sort of upward consolidation. You see the range widening, and and then you see the breakout above the into the new level. I mean, for all kinds of different reasons, this looks like a pretty good long. But at the same time, it could be spent. So, see, here we go. We've got this little like gap up on the 1 minute real quick. But if you're looking at the 3 or 5 minute chart, it still looks like that thing's gonna roll over anytime now. It's underneath the VWAP on the 15 or on the 5 minute. It's underneath this VWAP, so there's still a pretty good chance even here at 611. This might be, you know what, just for the sake of it, I'm just gonna show you guys possibly a live trade here. Let's see if we can't sell at 62.08, 25 shares. Alright, short 25 shares at 62.08. I've got a stop of 62.10. Oh, and looky there. Woohoo, we're up a little bit of 50 cents. I should have grabbed 100 shares, but I'm kind of, I'm not kidding when I say like I trade like a pussy. So if I can make $5 or $10 off of this trade right here, I'll be stoked about that. I've got lousy 25 shares short. I might just get out to take my dollar just to be an ass, just as a demonstration. You know what? I can do a partial cover. Why the frig not, right? I might as well try to at least make my commissions. I know I gotta make like $3. So here you go. This is like a decent demonstration. Now I'm in at 62.08, so right now that's my stop. So I'm gonna go ahead and like click position. I'm gonna go ahead. It's already looking like it's gonna force me to bail. Yep. Here we go. There we go. I didn't make shit, but I covered for break even. And that's how it does you. It fucks around. It chops you around. I mean, ultimately I know there's really no living to be made in this shit. I just watch for the setups that are actually worthwhile. I was just fucking around really, but that's how this shit works. Now that I'm out, it'll say, oh, okay, and it'll probably keep going down, but it has to come back and test your position. And it always will. You almost will never make money without your position first going red. And then you'll still usually never make money, because once it goes red, it'll just stay red and get more red until you get out. And then once you get out, it'll turn around and do exactly what you were hoping it would do while you were in it. Except it's never going to do it while you're in it because you're in it. So that's what a lot of traders need to get over and realize that, like, this is really a big hoax. A lot of people make money in this, sure, but for the most part, it's a big hoax. So if, like, you find yourself month after month not making any money, just losing money, do yourself, your wife, your kids, your family a favor and just stop doing it. Just move on to something else that's going to give you money, that's going to be more rewarding in life, that's going to make you feel better, that's going to make you feel like you're a decent person instead of just trying to be. Because oftentimes what it is, the people that don't make money at this, they're like either desperate for money or they're greedy for money. And in both situations, there's too much emotion involved. To really allow this thing to just work, you should really be able to do it from like a non-biased standpoint. Like, oh, I'm down $2,000. Oh, I'm up $2,000. There should be no emotion involved. And that's pretty challenging for most people. They make their decisions based on their emotions. And that's exactly what the computers want, because the computers don't have any emotions at all. They don't give a crap what your position is. They just are they're out to eat your position, whatever it is. They don't care. They don't have any emotions toward it. They just see it as a mathematical standpoint of, oh, I need to go this way to get you. So, that being said, that's that. why does this have to sit here and chop around forever at the same price? So 6204, 6203. Oh my god, 6204. Oh my god, 6203. Oh my god. So 6207. Oh, 6208. It's going this way. It's going this way. Oh, it's going to go that way. Oh my god. Boom, 6205, 6202, 62, 6201, 6203, 6204. It's the same bullshit. You know? It trap the longs, trap the shorts, trap the longs, trap the shorts, trap the longs, trap the shorts. You know, it's out to make sure the only way you get paid is if you happen to reciprocate someone else getting screwed. You happen to be like long here. And who gets long here? No one gets long here because at the time it looks like shit. At the time you're like, ew, that could keep dropping. I'm not going to just get long there. But the computers know that no one's getting long here, but everyone's selling out because they're scared. So after everyone sells out, that's where it jumps up before the longs can make any money. And same thing, I mean, how many people out there have traded and you realize like you can't get out or in fast enough to make the money because the computers move the damn price around faster than you can get up here and click your order. Did you see when it started popping up? I had to cover it 6208. You know, when the bid said 6203 or 4 or 5, because yeah, there's a bid-ask spread. I get that. I'm not stupid, but that spread right there works against you. It works against you constantly to make sure that making a profit is that much harder, and taking a loss is that much easier. It's what it's all about. So if you don't realize that, wake up, quit trading, or wake up and trade the right way, which is with caution and you know, it's one of those tortoise and the hare type things, you know. Everyone's trying to be the hare. Everyone's trying to get to 6 figures in a year, and ultimately you're just gonna, you know, if anything, you're gonna lose 6 figures in a year. So there's that. Wanted to go over that, you know, how to do the different chart setups, how to save them, the grid setups. Just makes watching very fast, easy, and convenient. You know, I've got my scanners over here for the top 10% gainers. I've got my watch list, and then, you know, down here you can add another gadget watch list. Not only can you add your watch list, but you can also add your scanner settings. That's what these purple things are. Each one of these purple things means it's a scanner setting, which means it changes in real time. So these are like scanners. This is just a watch list. These are the same list of stocks every day that I saved here to this list. And it shows me, you know, you can organize them by clicking on these, up or down by bid, up or down by ask, up or down by last, up or down by net change, up, all that. You know, same in the scanner. So you go to the scanner, you know, you scan your results. You can go up or down by volume, up or down by bid, up or down by net change, up or down by percent change, whatever. And then once you scan your results and you get your list and you're like, oh, you know, I like all these ones here. You know, then you just go over here and you send it to 1, and you send the next one to 2, and the next one to 3, and the next one to 4, and then you go over to trade, and you know, you hop on setup 1. And then the one you know, 1, 2, 3, they all show up here in your select boxes. Now, down here in your watch list, you can also go to your own personal scanner settings. Like I've got one here that I saved called low floaters with volume. If you're using the scan tool up here, you can set your exact scan settings. Like on this one, I've got my volume set like I want max volume. I want a price that's between $1 and like $25 roughly. Oh no, this isn't my, this is a pre-saved one. Personal, low floaters with volume. Alright, here we go. So the shares is the float size. So I want between, you know, 500 million and like roughly about 1 million share float. I'm looking for, significant volume, anywhere more than a few 100,000 shares of volume. So significant volume, relatively low float, and a price that's between, I have this right here set to where the price doesn't matter, so I'm just trying to capture anything in the market that's high volume and low float, but you can refine this to whatever you want. You run your scans and boom. Now, thing is, I can go over here to my watch list and go to personal, and these ones with the purple are scanner settings. The ones without the purple thing are just watch lists. But these are like actual scanner settings, so that I can set this right here to highest net change, and it'll show me the highest net change stocks on my scanner settings in real live time. So as you can see, these are ticking around, the market's open. As these tick around, they change based on what's in play and whatnot. So I'm watching that. I got my CNBC. I got my Squawk Box running. Boom. I'm on Twitter. I'm on Stock Twits. I've got my top 10 percent gain NASDAQ and percent gain New York Stock Exchange watch lists here. This is really all you need. Beyond that, it's just experience and know-how of when to have entries and exits, when to scale in and out, and all that fun jive. And how to avoid getting eaten up by algorithms, and when to just know when you're wrong, not give the computers too much opportunity to chew you up. You notice when I took this position here, closed positions, I lost no money. Look at it now too. It's bullshitting. It's like, oh, 62, 62, 10, oh, 62, 62, 10, 62, 05, oh my god, 62, 62, 01, 62, 03, 62, oh my god, 62, 10. No one cares. And it's just computers getting pissed off, because I guarantee you there's roughly just as many longs as there are shorts. And that's when you see the market trade flat, is when, like, say there's $100,000 worth of shorts in there and there's $100,000 worth of longs. It'll sit there and dink around between a few pennies, just like it is right now, trying to shake out one side or the other, hoping that one side will just give. And when that one side gives, then it gives way to make more money out of the other side, and that's when it'll finally make its move. And traders are like, oh, it's range bound, it's stuck in a range. Yes, it is stuck in a range, but it's not because buyers are buying at 62 and sellers are selling at 62.10. It's because buyers are buying at 62.10 hoping for the breakout, and sellers are selling at 62 waiting for the breakdown, and the computer is just sitting in between trying to figure out what side it's going to fuck. And I promise you that's how it works. I put my kid's life on it. I promise you that's how this market works. That's how all markets work. That's how they've been working ever since they got all changed over to digital markets. Now that it's all computerized digital markets, this shit's a fairy tale fucking casino that's out to screw you. See, look at these candle wicks that just show up. They're just like, all of a sudden now the spread changes, and it's going from 62.08 bid to 62.02, or 62.02 bid to 62.08 ask. Yeah, it's kind of nonsense. And like, oh, see, here we go, 62.11. Oh my god, it broke out. Holy shit, what's gonna happen now? Oh my god. So now at this point, it's safe to assume that more shorts piled into here wait for the 62 breakdown. Because the computer is now saying, I'm going to go up to try to get the more money that's on this side. Because it realizes for the side that it has to fuck, the other side's going to get paid. So it has to try to get the side that's bigger to make it worth having the markets open. If everyone came into the markets each and every day and made a buttload of money, there would be no money left in the market for people to have. Eventually all that money would have to come from somewhere, and it would all be gone. See, now shorts are really getting fucked. They didn't even give them a chance. They didn't even give them a chance. The longs are like, woohoo, cool, it went to 620 or 62.30, but are they selling there? No, they're selling at 62.20. Even though the computer just hopped up, sold at 62.30, fucked all these shorts, now the shorts are all covering, and of course, like, the bid-ask spread is set up such that the shorts have to cover at a higher price, and the buyers have to buy in at a higher price, but the sellers who might be bought up here that are now at a loss have to sell out at a lower price. And that's how it works, ladies and gentlemen. That's why a stock can move back and forth all day long and just take your money all day long. You can get in, get out, get in, get back in, get short, get long, get this way, get that way, and it'll fucking jig you and jag you the whole fucking day. Back and forth, back and forth. Fuck you, fuck you, fuck you, fuck you, fuck you, fuck you, fuck you. And it loves it. Loves it. So yeah, a bunch of buyers piled in now, so now it's going to drop back down, and probably, now that all the shorts fucking got squeezed out, and everyone that was short here waiting for the 62 breakdowns now like, fuck it, I was wrong. The computers came up here, sold all their profits for fucking, sold all their shares that they
LIVE,
were
Live
long.
Venture spiking on volume, Lima India Victor Echo.
Sold all their shares that they were long at 62.30, got short in an eye blink, and then dropped the price back down on the long. So it's all a matter of like moving faster than the people can. That's part of it too. And see, now that it's up here, if a bunch of longs continue piling in, hoping that this is going to go up, it's going to continue to go down, and then we're going to see the 62 breakdown now that there's no more shorts in for the 62 breakdown. You know, it's just it's a mind fuck this way and a mind fuck that way and a mind fuck this way and a mind fuck that way and a mind fuck this way and a mind fuck that way. You know, a lot of people call them head fakes. Oh, it's been head faking all day. Yeah, that's what it does. Is it going to go down? Oh, right when everyone thinks it's going to go down, nope, starts going up. And right when everyone thinks it's going to keep going up, oh, starts to go down. And it's a matter of how we can best fuck everybody. How we can best fuck everybody. That should be what the market is actually called. So anyhow, I've been rambling long enough. For those of you who, thought this was useful, let me know. If there's anything else you'd like me to go over in another video, let me know. I'd be happy to show you other ways to trade, especially if, like I said, thinkorswim is your only trading platform, because there's so many different ways to place an order. Like, you could put an order right here on the screen, just like that. And if I were to hit send, it would show up like buy at 75 cents right here on the screen. That's one of my favorite ways to place an order on thinkorswim, because you could actually slap your orders right on the chart itself and be like, if you want to buy this 130 breakout but you don't want to buy it until it's above this level, you could put a buy order at 132 and just leave it there. Buy stop order, and then it'll buy you in when it gets to that price. If it breaks out, obviously people are like, amateurs are like, well, how come I don't buy 122 down here while it's down here waiting for the 130 breakouts? Because by then it might decide to start, you've got to look at things from a risk management standpoint and not just buy in at random prices and places. 124 and 122 is not really a significant price point. It's not significant enough. This area is significant. So yeah, it wouldn't be a terrible entry here at like the 120 level, but you gotta scale in. You start small, start putting ads on here, and when it's confirmed and you're right, hits 130, starts to break above this level, maybe you want to think about putting on size or giving yourself, scalability. Start getting out some shares here, but maybe add into this strength. Like, you just gotta look at it from a standpoint of like, each and every step of the way is a step that I might get fucked. And if you don't have that preparedness in mind, you're not going to be able to get out of the way. Like with this trade here, I could have easily still been short this fucking thing, because I was looking for the 62 breakdown. And I got short up here. I was kind of smart. I gave myself a few extra cents to work with. But it still came back up like pretty much right away and ticked me out at my entry. And I wasn't going to let it go beyond that, because I would have been that guy who was like up in here going, oh shit, now it's freaking 30 cents against me and I'm trying to get out. And then I get out, I get top ticked, and then it immediately drops right back down to where I wouldn't have got fucked so hard. And like I said, now that it's gone up and screwed everybody out that way, here it comes straight back down, It's not like it's doing this jig-jag shit no more. It was like, oh, up here, now it's going to come right back down, and then it's probably going to break through 62, just long enough to get all the shorts in. A bunch of people are going to get short, pile in short, and then it'll spike back up to like 62.10, just long enough for people to be like, oh shit, it might go long again, and the longs pile back in, the shorts cover because they're scared. So they take a loss, and then as soon as it's heavy on the long side again, boom, here we go. And now see, I mean, dang, you know, now, oh, Lord. I mean, see, and look, right away it's like, boop, 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 you know, everyone's, oh, it's all people piling in to cover their shorts, like, yes, it is, sorta, but the jig-jagging back and forth is really computers making sure that orders go through just a certain way. If you don't believe me, talk to like some of the few people in the market who actually know about how rigged the market is, like Eric Hunsander and a few of these other guys. They pay attention to how computer rigged this shit is. And wow, man, now 62, it's looking like it was a perfect short, huh? See, it's what it does, you know. This was coming. I felt that this was coming. And so I got in this area, but had to do this one last little chig to short up. Anyone that was short along here who was already in the green would have got shaken out too. So now at this point, somewhere in this, it trapped more longs than shorts. More longs piled in here than shorts did. And that's why the few shorts that stuck through this shit up here are getting paid. And everybody else is getting fucked. You know, now you've got buyers thinking, well, maybe I'll buy in here. Maybe it's a good dip buy opportunity. And it might work for like a little bit. Like if you just got in here, down here, you got lucky because you got a fill. And like now you're up 20 cents while these shorts are covering. Because that's what this is. What few people here were short. They're like, man, I wanted that 61.40 cover, but now they're getting stuck with having to cover at 61.60 because it just magically, you know, hops 20 cents, and now you're up here. So, you know, and yeah, so now you can tell not as many people got in down here. They're more interested in screwing the shorts that are right because all the longs already hit sell and got out for their loss instead of adding, which is probably what they should have done. Even though that's what you shouldn't do at the same time, because you're just adding it's all a matter of how much money you have. If you got $1 million in your trading account and you're only putting a couple thousand on here or there, then you've got plenty of room to be like, oh, I'll put on an ad at 61.40, 61.50, 61.60, and maybe at this point you could have corrected your position, got out for a little bit of profit, but most people are trying to trade fucking a little bit here and a little bit there, so you know, they probably are already have taken their loss, and now it's going to grind right back up in their face to screw anybody who's still short, because God forbid the shorts have an opportunity. You know, they took some money down here, some profit taking just happened on the short side, but for the majority of it, most of them are already out enough where, you know, it's probably going to keep going down on the longs. But at the same time, if there are still enough shorts in here hanging on, hoping for more.
TGT target October 75 call at the ESC at 53 cents. Tango Golf Tango target.
So yeah, that's how it works. Anyway, I'll end this here. Let me know what you think. Hit me up if you need to, guys. Also, real quick, shout out to Kenny Glick over there at Hit the Bid. If any of you guys are unfamiliar, you need to go hit him out, check him out. You know, if you're cool, he'll let you into the chat room for a while and just get a feel for what we do there and what types of plays he looks for. And he's been around for a while. If you don't know him, look up Hit the Bid or Hit the Bid Radio. On YouTube, his Hit the Bid radio channel is where he broadcasts his videos. So I'm in there most days hanging out with them guys. I have a few other chat rooms I check out from time to time. But So yeah, shout out to Kenny Glick, man. I appreciate everything you do. And then you know, the rest of you guys subscribe or hit me up if you have any questions. Feel free to comment. And if you are trading real money on this thing, I hope that you've practiced and that you're trained, and I wish good luck to you, man. Don't hold your losses. Peace out.